Hey guys, Ken Calcutt here with Cornerstone Financial Management. Hope you're doing well. Haven't done a video in several weeks, so I wanted to give you guys an update. We're in late March 26, and I wanted to give you an update of what's going on in the stock market. As always, this is just an S&P 500 chart, just to give you kind of an idea of what we're looking at. This drop back here, this was basically a year ago, March, April of 2025, when the tariffs were rolled out. Stock market was down significantly. At this low point here, that's when the tariffs were paused, early April. So from there all the way through roughly October, had a big rally in the stock market. Things were great. And you'll notice here, we've had a little bit of a pullback. Stock market's down probably 5 or 6% from the peak recently. Most of this pullback here has been just through the month of March since the conflict in Iran started. So what's happening here, this is my take on it. I think this is kind of a domino effect, if you will. The war is causing oil prices to spike considerably. Oil is currently around $95 a barrel. Before the war, it was in the 60s. So a big spike in oil. Oil is almost always at the center of recessions. So when oil prices stay high for too long, it slows down the economy. The risk of recession gets bigger and bigger the longer oil prices stay elevated. So that's why the stock market's getting a little jumpy here, because we all know if oil prices stay high for too long, recession gets more and more likely. Now, having said that, I don't think this conflict is intended to be very long. I think Trump's going to try to wrap this up as quickly as possible. He very well knows this, what I was just describing with oil prices being problematic. If they can get the conflict wrapped up quickly and get this Strait of Hormuz reopened fairly quickly, and those two are somewhat mutually exclusive. We could wrap up the conflict, but the Strait not be reopened. And the Strait is the bigger issue, honestly. If we can get the Strait opened and tankers flowing through there, I think oil prices start coming down. If the conflict wraps up, the Strait opens up, oil prices come down, stocks probably resume growing. I think that's how this would probably unfold over the next 30, 60 days is my guess. But for the meantime, it's definitely a little choppy. We're probably down 5 or 6%. If I had to guess, the S&P is around 64, 6,500 today. I think we might see low 6,000s, 6,000, 6,100 is distinctly possible in the next 30 days. We may not get there, but we might. We'll just have to see. Again, I think it all hinges on this conflict and how quickly it gets wrapped up. Now with that, this is what I would call an event in the market. This is an outside event that's affecting the stock market. The fundamentals of the stock market and the economy are actually really strong in my opinion. So we just wrapped up first quarter earnings season. So we get the earnings reports from all publicly traded companies every quarter, and we just wrapped up first quarter results, and the numbers were quite impressive across the board. Corporate earnings for the U.S. companies was very, very strong, and the projections for the rest of the year are very, very strong. So that's a great setup for stocks to rally and recover as soon as this conflict is over. I think that's what's going to happen. Now, I don't think this recovery is going to be as sharp as that. This rally we saw last April when the tariffs were paused, it just went straight up. I don't think it'll be that sharp. I think it'll be more of a gradual climb back up. That would be my guess. But ultimately, as oil prices come down, I think we have a good economic setup for the stock market to resume growing, and we could very well have a positive 2026. Now, having said all that, we do have midterms. So this is a year of events. Midterms are coming up. Who knows how that's going to go? We have a new Fed chair going in May. That's always kind of a big event. So that could cause things to be a little shaky for a while. So I think the key takeaway here is the economic fundamentals are pretty good. We have several events we anticipate this year that could cause the market to be a little bit shaky like what we're seeing right now. But ultimately, this is not looking like a setup for some major correction, 20, 30% drop. That would be very surprising to me. I think this is going to be a temporary 5 or 10% drop. The conflict gets wrapped up, things resume growing. So hopefully that's how it plays out. No way to know for sure. We are not adjusting portfolios considerably right now. We feel like just kind of sitting tight and letting this play out is probably the right move. But we'll see. We'll watch it, see how it goes. One other note I want to mention, tax deadline April 15th. If you need to fund IRAs, Roth IRAs by then, that's the deadline for 2025. Give us a little bit of processing time though. If you're funding IRAs with us, get it to us before April 15th. April 10th, April 12th would be great, so we have processing time and we don't run into delays. So if you need help with that, reach out to us. Of course, we can help with that. But as always, if you have questions, we're here to help. Reach out anytime. Thank you.